Welcome. Today's hard truth is unless your CPA is involved in your business, and I mean not running the business, but if you're visiting with your CPA, certainly more than once a year at the end of the year, if you're not doing that, you are leaving thousands and thousands of dollars on the table in unrealized tax write-offs and tax gains.
Curious what business owners are doing to double revenue, have more cash flow, work less hours, and provide a better lifestyle for their family? Dive into the world of business growth that leads to guaranteed wealth. Your hosts, Dr. Laura Shwaluk and Jerry Kezhaya. Grow and get answers to your business and investment questions that provide clarity, move you forward, and inspire you to reach your goals.
Welcome to this edition of the Business Builders Intensive. Our special guest with us today is actually our personal CPA, Kurtis Ward. And we're really happy to have you here. Kurtis, one of the things that really impresses me about you is that you do help us plan earlier in the year. Because I've heard you say before that tax planning doesn't happen at the end of the year. You got to do it, meet several times in the year. So tell us a little about your company.
Who are you?
Oh, I'm Dr. Laura Shwaluk, and this is my co-host, my husband, the man of my dreams, Jerry Kezhaya.
Woo! Man, she takes good sleeping pills if I'm the man of your dreams.
The melatonin.
Kurtis, tell us about yourself and how do people reach you? And then at the end, I'll ask you, what's the best way for them to reach you again? I'll ask that again.
Yeah, my name's Kurtis. I have a practice here in Sherman, which is kind of North Texas. I have a business partner, Abraham. We focus on business owners, entrepreneurs, real estate, and then he focuses heavily on estate tax work. So just a two-man shop. We're small, but we like it that way because we give the attention to detail to clients that need it. So
small and mighty. I love it.
Yeah, not trying to be the biggest in town.
Thank you. Small and mighty.
Yeah. So they can find us at magistertax.dfw.com. And
spell
you
it for me,
book
please.
appointments on there, reach us out on there as well. So
spell the URL.
Magister, Magister, tax.dfw.com.
Thank you.
Thank you. Awesome. Okay, let's talk about tax.
That time of the year.
We love to pay our taxes.
Yeah.
Oh my gosh.
What the heck? What's that all about?
Yeah.
I'm the one that writes the checks. No wonder she likes it. I just do it.
Yeah.
Said no one ever. Kurtis, what is something that small business owners can do that will save them thousands of dollars in having to pay taxes?
So the first thing is having proper books and records. Without that, you are behind the ball because tax planning is about having relevant information at hand. So if you don't have the relevant information at hand, when I do the tax planning, if I'm putting bad data in, I'm going to spit out bad data coming back to you. So having a bookkeeper or in-house bookkeeper that is up to date on doing the reconciliations and proper categorizing expenses, that is imperative to each business owner. I'm sure you guys have done a bunch of conferences and you ask the owners, like, well, how much are you making? The first thing they say is their gross revenue.
Yeah.
Yep. And they'll go, I made $1 million. It's like, did you make $1 million? What's the net income? Well, I don't know. I don't know all that. I just know I made $1 million. So proper bookkeeping is step one to good tax planning. Then after that, it goes type of business you're in. If you're in a service business, depreciation is your best friend. Buying new assets are your best friend because you get the bonus depreciation. And normally the time that happens is it's a non-cash deduction. So meaning you probably financed a truck or a piece of equipment, you get the big write-off. You're not paying, the cash flow isn't going out of the business, but you get the big write-off. If you're in real estate, your biggest play is cost segregation analysis. And that's when you buy a new building, they go in there and they determine which properties 5 years, 7 year, 15 and 30, 39, and you get bonus depreciation on 5 years, 7 year, and 15. And that's a huge, huge savings. So that's my that's my tax tip of the day is make sure if you buy something new, uh, get a cost segregation analysis done, especially if you're in real estate.
That's for accelerated depreciation.
Exactly. And that's what
Yeah.
we're trying to do. We're trying to accelerate depreciation. I mean, not in every case, but in most cases, 90% of the time you're trying to do it all at once.
So help me to understand the logic or the rationale between accelerated depreciation, because when I depreciate it, don't I have to recapture that with the gains when we sell the project?
You do. You do. You definitely do. Uh, so there are some downsides. I mean, most of the time what happens is if you service person buys a truck and they sell it, they're going to rebuy another truck. And when you pick up the recapture and you buy a new truck, normally they wash each other out. Now, for real estate, you have the option to 1031 it into a new property. But if you don't do that, what normally happens is we try to plan it in an event where depreciation recaptured is taxed at 25% max. So you could get the deduction at 39.5, and the recapture part is picked up at 25%.
Got it.
So there is a difference, and that's just Congress is very, very generous to real estate. I don't really know the explanation of it, but they really are. Whoever's in Congress, they tend to favor real estate professionals
Because they own real estate.
because they own. I'm assuming that's probably the direct answer, but yeah, they write the rules to benefit themselves, and there's a lot of beneficial rules to real estate.
Yeah, they're not writing anything just to benefit us. If it doesn't
No,
benefit
no,
them, I
probably not.
guarantee you, those buggers aren't touching it. They don't even know how to read it at that point.
No, you're probably right. That's probably the play. Yeah. So.
Uh-oh, I got the look.
Well, okay, I'm going to go in a different direction right now.
Yeah.
Hang on, everybody. This is where you get whiplash.
Yeah, this happened with one of our coaching clients this past year. At the end of the year, it's like, okay, how did it go? And he said, well, my CPA told me that I had this much profit, but it's not in my bank account. I don't know where that money is.
Yeah, where does it go?
And so and he's like, and I have to pay tax on that money, but I don't have money to pay tax on it. But he's showing that I had this profit, but where is the money? And so, yeah, can you speak to that just a moment?
That's a very common. I mean, you guys probably teach on it in your business class all the time. So payments to loans do not reduce business income. So if you have a ton of loans and principal payments each month, that will definitely reduce the cash flow.
Yeah.
And distributions out to the owner do not count as deductions either. So those are the two biggest plays. Also, buying assets, I know I said they're great, but that also reduces cash at the end of the year.
Yeah.
So
when you're showing profits of $250,000, $300,000, $400,000, or whatever your number is, and you're looking at your bank account going, but where in the heck is it? Well, you need to look at
your balance sheet.
What were you paying monthly payments on? What did you purchase during the year? How much did you take out for your bills, for your pocket, for your extravagant vacations, et cetera, because that pulls money from that number. And small business owners seem to forget that that's all part of the program.
Yeah. No,
and am I accurate in saying that interest paid to credit cards is also that's not categorized as an actual expense?
business credit cards, I would tie that to.
Okay.
Yeah.
Yeah. Just wanted to
Interest
make
on
sure.
now, I wouldn't want to pay it anyways, but I mean, you get the deduction, but the goal is I would highly advise you to pay the credit card.
Yeah, pay the credit card off every month.
Well, yeah, that's the thing, right? When you have $100,000 in credit card debt, you're spending over $30,000 a year just in interest, and that never touches the principal. And you're paying $30,000 a year every year until that $100,000 line of credit gets to zero. So your cost to have that money is outrageously expensive.
It is. And as you know, you as business owners tend to be interest rates to business owners are generally higher than individual loans.
Yeah, because they're higher risk.
Yep, higher risk, so you're usually paying a couple points higher.
Yeah.
So
Or
those are
more.
things to look out for is high interest loans and credit card. I mean, there's a reason why they ask you to pay the minimum payment on the credit card statement. They don't want you to
It's
pay the full balance.
yeah, it's not for your benefit, it's for theirs.
It's for their benefit. Yeah. Please make the $41 payment off the $10,000 credit card bill so we
Right.
can
Because
back out of there.
they want to keep that 30% or 33%
Yeah,
interest rates.
that's right. Exactly. So,
So has the big beautiful bill created havoc in your world?
only in one area, and that's the no tax on overtime. That has created havoc. Because when the law passed, normally it's up to the owner, like you guys yourselves, when you guys do your paychecks to calculate how much overtime you paid your employees. That didn't happen this year. They left it on the tax preparers to report the overtime earnings. So this year, your overtime hours don't get put on your W-2. So you have to, so when a client comes in, they go, I had overtime. It's like, okay, where's your last pay stub? Well, I don't have it. I don't know where it's at. Well, it's like, well, I can't do anything until I get that pay stub. And then if you left a previous job, right, usually your access to that is limited, or if not, sometimes none. I mean, so
Depends on the terms you left that job.
Yeah.
exactly. If you're not nice, the previous owner is not going to be, taking time out of his day to go find old pay stubs for you.
Yeah.
So that's the only hard one. I mean, I know a lot of people got promised on the no tax on Social Security. It kind of was misleading, but I mean, it's better than nothing. So so Social Security hasn't changed. It's still taxable. You just get an extra 6,000 deduction. It's called a super senior deduction. If you're married and both of you are over 65, then it's 12,000. So it helps. Most cases it helps eliminate the tax on it, but it's not everybody. So
Yeah.
not everybody.
And Section 179 doubled?
I don't know that off the top of my head. I know bonus depreciation is back in full force. So that means you
What
gotta
is
deduct
section
100%.
179? What is that? What's 179?
It's when you equipment
Oh,
Yeah.
purchases.
okay.
So
You
you
can
get
write
179 or bonus. 179 was big before the Tax Cut and Jobs Act. Because they didn't have bonus depreciation. So you could 179 is was really popular. Now it's all about bonus depreciation. It's 100% this year. So if you buy a piece of equipment, you get 100% bonus depreciation. Why people don't like 179 now is 179 can't reduce your business to a loss. So you can only take depreciation up to the income. Can't throw your business into a loss.
got it.
Bonus depreciation can throw your business to a loss, which could help offset other ordinary income. So for example, if you're a business owner, you buy a truck and you take the loss in your business, it can offset your wife's W-2 income if she had a job somewhere else. 179 would just take it to zero income for the business and then carry forward to the next year.
Well, that's nice.
Yeah. So bonus is where it's at for right now.
Very good. Wow.
Yeah.
So I should go get a job.
No, 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 not yet. Not you guys.
No, dude, I am unemployable.
You
Are you
got
kidding? After owning my own business for 45 plus years, I am certifiably unemployable.
you got enough jobs.
Right? I have enough shit going on. You know,
So
there's actually a joke about that. And the fellow goes to work. He's working at Walmart as a greeter, and he keeps showing up 10, 15 minutes late every day. And finally, the manager comes up to him and says, at your last job, when you showed up 10 or 15 minutes late every day, what did they say to you? They said, "Good morning, boss. Would you like coffee?"
yeah. I'm just here for
That
the
would be
help.
that would be my response.
Yeah. Exactly.
Too
So.
funny. Okay, let's talk about entities for a moment, because Yeah.
I mean, like
Oh,
imagine the
he
entities,
says,
spiritual entities.
like I opened Pandora's
You
box.
did. You
Oh,
opened Pandora's box.
okay.
She's good at that.
What are common questions that you get about entities? Let's start there.
The most common one is probably, when do I switch to an S corp? It's probably the most common one.
And what's the answer to that?
There's no 100% right answer. The general guideline is if your business net income from the business is 50,000 or greater, there are some tax savings to convert to an S corp.
So that's
And
from an LLC to an S corp?
that is correct.
Or
Yeah.
from a C to an S.
Uh, well, C corps are all another Pandora's box. There's reasons to have a C corp, which would be if you're a high gross earner, the corporate tax rate's less than the income tax rate. So there's some tax savings there. Problem with the C corp is usually always getting the money out efficiently.
Yeah, that always creates double taxation.
That
You
always
pay
creates
your
double taxation.
you pay your corporate tax, and then you have to pay your income tax. So,
Yeah, and then you got to pay a dividend tax.
yep.
If you withdraw the money. There are some plays where it's okay. It's just hard to get the money out, unfortunately.
My understanding, the best reason to have a C corporation compared to an S is if you are going to be working with investors or taking it public.
Yes, because then you get Section 1202 stock. That is the big play of doing it. But for the most average single, mom and pop shop, S Corp is the play once income is over $50,000.
Way better than C Corp, hands down.
Hands down. There's, like you said, there's always an exception. There's always an exception of, maybe a partnerships will better fit you than an S Corp. Like our company, we're a partnership, just because we like to, how do I explain it? We don't want all of our revenue being 50-50 to each business owner. So there are some practices, I don't know if you've worked in medical practices, where, one partner is doing a lot of the work and the other one's not. So it's like, well, how do we allocate that income? Well, in an S Corp, you can't allocate it pro rata based on billing. It's based on ownership. So there are some scenarios where it's like, well, we set up the partnership and then your S Corps can own that percentage of the partnership. So there's different energy structures, but that's kind of the play.
I just realized something. This is one episode where we don't have to say this cannot be construed as legal or tax advice. We have a tax guy. We have a professional.
Yes, this is tax advice.
This would be the same as law firms, I imagine, too, because they have their own billing structure and
Correct.
partnership agreement.
Yep. And a lot of big accounting firms, the ones that we used to work at, it's set up as a partnership. And when you buy in as a partner, you're buying in as a profit sharing partner, not an equity partner. So meaning you get a percentage of the profit, but you don't get any of the equity of the company.
Beautiful.
Yeah. So that's one way to structure it.
And I'm sure at the end of the year, beginning of tax season, or in the week of April 1, your favorite client is the one who comes in with a shoebox full of receipts and just dumps them on your desk and go, here, you go figure it out.
I love those. I tell them I add real slow and my hourly rate is this. So I have a special 10-key calculator just for that scenario. And if I mess the number and I have to start all over again, then I do.
Oh my God. So in other words, don't do that, guys.
Yeah, no,
Please,
don't do that.
please don't do that.
Don't do that. It's going to cost you more than it's worth.
Have a QuickBooks program going. Send it to the accountant. It's easier. It's much better for you, I promise.
I prefer an Excel file over a shoebox of receipts.
Right?
Yeah.
Oh, any day.
Any day.
We've had clients that were accountants, and they would tell us the horror stories of people coming in the week that the taxes are due with these shoe boxes or cardboard boxes filled with receipts, and they had no idea where they were. It's like
the worst part is, I'm like, most of them don't even apply to anything. So you end up looking at it, it's like, I don't need your Albertsons receipt that you got oranges for,
right?
related to anything.
Yeah, that's crazy. And people still do it. I'll tell you a fun story. I've been audited several times. And our books, as you know, our books are tight. We
No,
don't,
they're good. Yeah.
we don't, we've had several outside firms come in and audit us and just make sure for people, investors or people that we were looking at selling companies to, and everybody to a person has said we've never seen small companies books as tight as these. And every time, and this is the takeaway for you, okay? Every time we've been audited, they would come in, introduce themselves to me, and say, we're here to inspect your whatever it is. And I just take them, I say, follow me. I take them back to the accounting office and say, ladies, this is so-and-so from such alphabet group. Give them whatever it is they want. And I go, you good? They go, yeah, okay, thank you. And I walk back and I go to my office. And 100% of the time, they come into my office after the audit and they said, yeah, we didn't find anything. We knew we wouldn't find anything. And I said, why is that? Because the people that are hiding things, the people that we really have to worry about are the ones that say, oh, I didn't know you were coming today. My accountant has my books. Can I come back? Can we reschedule in a month or something like that? They said, when you just walked us back there and said, give them whatever you wanted, whatever we needed, we knew right then and there we wouldn't find a thing.
Yeah. Well, as you know, guilty people tend to hide stuff.
Yeah, man, arguing with the alphabet folks, and I don't care which group it is never a good idea. And having all of your records, your tax records, your billing,
especially the tax records of payments.
oh my God,
Yes.
yeah. Having it there at hand, it helps you sleep really, really well at night. You have so little to worry about.
So when you get the notice that we got recently that I forwarded on to Kurtis, I'm like, hey, I got this notice from the IRS saying that we owe $17,000, and part of 5,000 of it was a penalty.
Penalties and interest.
And I said, but I know I paid that. So I went back on our records, pulled it out, and Kurtis said, oh yeah, let me just call the IRS. They applied it to the wrong year, even though the correct year was on there.
Because you had that piece of paper with the confirmation number and all that, when I call, I read in that confirmation number, they say, oh, we found the payment. It was applied to the wrong tax year. I ask them to move it over, and voila, it's done. If you don't have that confirmation number, then we're got to do a payment search, and it just takes time.
It was a $12,000 tax with $5,000 in penalties and interest.
That's right.
Like, this is crazy. And because they dropped the ball, they expect if you don't have your records in order, we would have been, if we didn't have our records in order, we would have been forced to pay the $17,000 or $18,000 that we got an invoice for from the IRS, and then fight them to get our money back, which would take probably 2 or 3 years.
They are one of the only agencies where you're guilty until you prove yourself innocent, instead of you're innocent until you're proven guilty. It's a weird, it's a weird dynamic.
Crazy. So if you're listening to this and you haven't paid your taxes in a few years, or you've got many shoe boxes filled with receipts, please do yourself an amazing favor. Get that handled quickly. You will save yourself so much time, money, trouble, grief, sleepless nights, etc., etc.
Yes.
Trust me, I learned the hard way.
There's a common myth out there that if you don't file your tax return for 10 years, that you're okay. I don't know if you've probably heard it, but I've had clients like, well, I haven't filed in 10 years. That means I'm okay. They haven't sent me anything for 10 years. And as every myth is, there's some sliver of truth to that. So if you file your return and you owe on that return, if the IRS doesn't assess any federal liens or levies on that payment, and they haven't collected on 10 years, then that debt goes away. But the big stipulation is you had to have filed the tax return for that 10-year statute to get over with. So if you never filed it, that 10-year statute never started running.
So they can come back and say, hey, we need tax records and we need you to file for the back years, for the past 10 years.
I have one that, we just did 12 years over $1 million of back taxes, and now we're working with the IRS to get some offer and compromise done of some sort. But
That's amazing. I'd
yeah,
also like to talk about, there's a myth, a misnomer, a misbelief that says you only have to keep your tax records for so many years, and they've shortened it. People are out there saying only 3 years now. It used to be 7.
yep,
I'm going to tell you, they have the right to go back forever if they believe that you are fraudulently posting information. If they think that you are fraudulently
yeah,
putting bad claims in, there is no time limit.
that is 100% correct.
So that's a big myth. I've heard it so many times from our clients. Oh, I don't need these docs anymore because no, yes, you do.
Yeah, that is true. If they believe that fraud was on there, it's unlimited.
Yeah, yeah.
3 is generally maybe you're just a W-2 employee, or I would tell business owners 3 is not your case. I tell anybody else, you just got Social Security income and a W-2, or 3 is probably enough. But business owners, yeah, definitely not. 3 is not your statute.
Definitely not your number.
Yeah, that's not your number.
So I
So,
want to tell a story that happened to me when I first started the company many, 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 many years ago. As I said, in January we celebrated 45 years. So 44 years ago, this guy walks into my office. And I said, "Hi, can I help you?" I'm your savior. I'm here to save your bacon. It's like, I don't even know who you are. What do you want? He said, "I'm so and so from such and such uh, uh, bookkeeping and tax service." I said, "Okay." He says, "I'm going to save you because I'm going to help you with your 941s." I said,
okay,
"Okay, how are you going to do that?" He said, "Well, you have to do it every quarter." He said, "So I know you're busy running the shop. You don't have time for that. I'll take care of all of those for you every quarter and keep the IRS off your butt." Great. Happy to do that. Went great. The next quarter comes around. He says, "Oh, by the way, I came in. You weren't here. It was the day the tax was due. I went ahead and paid it for you. I filed it. I paid it for you. Here's the check you need to reimburse me for." So I wrote him a check for, $3,000, whatever the number was. And that went on for 7 quarters, almost 2 full years. And I had these receipts where I had paid him checks, and it said right on it, 941, et cetera, and the numbers matched the reports. Everything was good. And before quarter 8 came by, this guy came into my office, and long story short, he flashed a gun and a badge, threw me up against the wall, and introduced himself as an enforcement agent for the United States Treasury Department Internal Revenue Service. And it ended up costing me $75,000 in taxes, penalties, interest, et cetera, et cetera. And I said, "But look, here are the checks I wrote." They said, "You didn't write it to the IRS. You wrote it to another company. That doesn't mean a damn thing to us. So I
yeah,
promise you, be careful who and where you get your information from and who you trust. Make sure that they have your best interest at heart and not just taking money out of your pocket."
yeah. I will tell every business owner the 2 taxes I tell people, obviously I want you to file your federal income tax, but the 2 taxes that agencies don't mess around with is sales tax and payroll taxes.
941s and sales tax, yep.
Those are the
Because
two. Those are
you
the
have a
two.
you have a fiduciary responsibility. You took the money from
Yep.
people. You took it from their pocket, and you did not pay the government. Those are the biggest hammers that will knock your brains out.
I would rather you file those 2 and not your federal income tax return than, the other way around. I mean, I want
Oh,
you to do them all, but especially those 2. Don't mess
if
with
you
those 2.
if you have to choose,
If
let
you
me
have to
tell you,
choose.
from firsthand experience, it's a
Yeah.
very expensive lesson. And the tops of the form have these little boxes already there that says failure to file, failure to pay,
Yeah.
interest, principal. I mean, they're already there on each sheet. So
They'll work on you on your personal return. They're not going to work with you on payroll and sales tax.
yeah,
That's for
that's
sure.
that's all non-negotiable. You
Yeah.
must pay every penny plus interest and penalties.
Correct.
Promise.
Yep.
All right, I have another question before we wrap up, and I
Yeah.
have a question for you, Kurtis, and then I have a question for our listeners. The question for you, Kurtis, is because it is going to happen, when a business owner gets a notice from the IRS, what's the best thing that they need to do with it?
They need to keep it and they need to contact a professional. I mean,
They need to open it immediately.
open it immediately, scan both sides in and send it to your professional.
Yeah,
That's
don't try to fix this at home. Send it to a professional, please.
no.
You'll save yourself so much trouble.
And on those notices, they'll have the form number, and like we were talking, if it says 941 on it, that one's an urgent. That one's an urgent one. They're all kind of urgent, but that one's especially urgent.
Yeah.
So
Yeah, make sure that gets done. And if those letters are piling up, please call Kurtis. Kurtis, give us your information again on how people can reach you.
yeah, you can find me at magistertaxdfw.com. You can book appointments there. My email's there, phone number's there. But yeah, MAGISTER tax, TAXDFW.com.
Excellent. And we're speaking with Kurtis Ward today. All right, so I have a question for everyone listening. And my question is this: are your books right? Are your books right? If you were going to sell your business today and an investor was coming in to look at your books to know whether what you're asking for your business is accurate and right or not, are your books a reflection of what your business is actually doing? Because if they're not, you need to get that straight. And the best people to do that is Kurtis at Magister Tax, DFW. So Kurtis, any other words of wisdom that you can share with us regarding?
No, I would say if you're thinking about selling your business, you need about a 3-year leadway of doing the books and accounting right. Because a lot of companies will look back at least 3 years of tax returns and financials. So, got to cut the personal expenses out, the meals, all that stuff. If you're really wanting to sell, you gotta show you're profitable.
Yeah, as profitable as possible.
As possible. And I'm sure you guys,
And
you've teach business owners on this too. It's like, if you're about to sell, it's time to clean things up. Big time.
Very good.
anything else, Jerry?
Yeah, I just want to remind everybody our annual event is coming up next month at Money Freedom Legacy in Austin, Texas. You can go to our website, BBMMUSA.com. Check it out. We have an amazing special for you. If you are willing to go, you bring your spouse for free. And BBMMUSA.com. It is a life-changing event, and I think every small business owner should attend at least once, possibly multiple times. We have lots of new information that we will provide. We'll talk some about taxes. We'll talk a lot about money. We'll talk a lot about your freedom and what's better, looking rich or living free.
Living free. I can answer for you. Living free.
Well, that's what we believe. So
yeah, you're right.
Cool. So thanks for listening, and reach out to us. We're here to help. We really are. We love you.
All right.
Okay.
Thanks, everybody. See you next time.
All right. Take care.
Grow and get answers to your business and investment questions that provide clarity, move you forward, and inspire you to reach your goals. Share the show and connect with us at BBMMUSA.com to submit questions and learn more. That's BBMMUSA.com.